Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 22nd day of August 2014 and this is the daily report for gold and silver. After the tremendous downside pressure we saw in the precious metals markets yesterday, specifically in gold, we are recouping and we are actually back at a support level of about 1280. Market is trading up about $4.50 on the day. The low 73.70, the high 83.90. Current print 1280.82. Silver continues its downward spiral, even with these intermittent updays, these small green-bodied candles that you can see. What I am noticing is this consistent fact that we are getting lower lows, and as you can see, this low today breaks below 1935. Market closes at 1941. That's only off about 3 cents, so you're pretty much getting a pure doji. The low 1922 on the day, the high 68. More on silver towards the end of the show. So traders, a couple of hours ago, I sent you out a link to the most current episode of Chart This, our weekly series that we do with Kitco Media. And I talked about our longer-term view in the market. I readdressed the macro view, and I talked about what type of damage, if any, we have experienced with these most recent declines. Of course, gold over this last week has really declined after hitting some resistance. You can see these highs at 1320. I believe the high 1322 was the high. But our real resistance is not there. I believe that resistance has been at about 1311, and I'll show you what I mean. Because when we look at the real bodies of these candlesticks right in here, whether they closed higher on a green or lower on a red, these real bodies are appearing roughly at 1311. And so what I've done is I've changed my pointer into a crosshair so we can see 1313. There's 1311. And quite obviously, except for maybe a little bit of range on one candle in specific, two, the majority of these candles in terms of the relationship between the open and the close could not, I repeat, could not really make it above this particular area. We also talked throughout the week of a pattern which was coined by Steve Nissan, of course a mentor of mine, a candlestick expert, but it's not really a candlestick pattern. Simply put, it's called a scouting party, And in a scouting party, basically the setup for it is as the market is moving up, it hits resistance in a certain area, and on the subsequent following days, the bulls attempt to test the strength or fortitude of the bears as they bring the market up. What tends to happen, that's where you're getting these extreme highs here, and here specifically. You get much shorter highs that kind of falter right at around 11. But each time they bid the market up, what happens is selling ensues and brings it back down in the range. Now, in a scouting party, the successful outcome is to form a beachhead. We obviously didn't do that here. And what a beachhead is following these scouting parties, you'll start to see some subsequent closes above that resistance line. Steve Nissan calls that a beachhead, and then the market trades higher from there. This is an example of a scouting party which did not have the ability to make new highs and therefore began to trade to new lows. Now, there's no doubt I had some real concern when the market broke below 1280, because 1280 really is that first bottom that we had, a perfect 61% retracement from the most recent rally. And as long as we had this market come up, small corrective wave that landed above the 1280 and then moved off, the short-term model that we were looking at was absolutely intact. However, with this new data that has come in and these lower pricing, our longer term models are still in effect. Our very, very short term model in terms of our sub count, our smallest of the counts cannot be correct, because on that I was under the assumption that we had ended our corrective phase here, and then went back into an impulse wave. However, the fact that we gave it back and then some tells us that all of this is part and parcel of a corrective wave right in here, and that subcount wave 2 is still fully intact and still functional, still moving. Now, whether or not the market bounces off of this point here and over next week or so we see it move higher, that's one thing. The other thing, and this is very, very important, we talked about this in the chart this series, and that is when we look at this market, what we were seeing and what I was hoping would unfold. Of course, you have a $200 rally. You have a deep retracement, not quite 76, but definitely over a 61% retracement. 61, of course, of this $200 rally being 1261. Market comes up with a $100 rally. So when it came down and tested 61, that was a logical point for us to look for, and then in fact started trading higher. But as we talked about, we ran into this brick wall, an ineffective scouting party, and then the market came back down. What that did, though, when we take a look at these series of lows, low here, low here, low here, we cannot make that same claim. We have a lower low now, or at least approximately an equal low if the market recoups, doesn't begin to track lower. And therefore, I absolutely have some genuine concern. However, in terms of a long-term perspective on the market, we're fully intact. More importantly, what we talked about in the chart this, and I have been mentioning it throughout this week, is the fact that we have a range in the market at this point that without a question of a doubt is a narrowing range, any way we want to draw these lines. Now, you've also been able to see, of course, on the monthly chart, we're creating a very, very similar pattern, a compression triangle, even within the monthly studies. And of course, you've seen this chart. It's been in our macro view as well as on the chart this. We've been using this monthly, and we've had this compression triangle in for quite some time. But in terms of a very, very long-term perspective, we're really getting that narrowing of range. Of course, what we're looking at is this last activity here. When we look at our daily chart, really starting from this double bottom is where we draw the bottom or the start point of that compression triangle. So what I really believe is we could absolutely see some real fireworks once we reach the apex. But according to this simple study, of course, we went back to our daily chart, that apex could come sometime in September or even October. Now, the beauty of that is that we are right now in a model that's looking for, over time, a price move up to about 1380. So if, in fact, this compression triangle continues, we reach the apex, of course, it's our call right now that we believe that this breakout should be to the upside. But traders, that isn't necessarily the case in terms of this straight study. What a compression triangle predicts is a release of energy. It typically does not predict the direction that that breakout will occur. It can occur obviously in either direction. Rule of thumb, though, and this is one thing we really have to put caution in, rule of thumb is that it will break to the prevalent direction of the existing trend. And when we look at this market here, we have to say that there's been a lot of pressure to the downside. So we could see the break and the break move to the downside. We will just have to see how this market unfolds as it gets closer and closer to the apex. The other thing is that obviously if we break below this particular point at 1265 or at some point above this upper level resistance, that will, of course, enable us to look at a completely revised model. So traders, what's our sense right now about silver short-term prospects? Well, the one thing that we can see is that as gold drifted lower, silver also drifted lower. And although on any given day, because realize we had 5 consecutive down days up till today in gold, that wasn't the case in silver. You can see a couple of days during this week in which the market closed higher. That's what these little green candles are telling us. But they closed higher with consistency or consistently, lower lows and lower highs, this high right here being about equal, but we're getting this downward channel, we're getting this downward slope. The question is, will we find support? This is a very logical point to look for it at 1935, and I believe that that is analogous to the 1265 in gold. Although we haven't hit that in gold, that's 76% retracement in both markets in terms of a fib retracement. Traders, have a great weekend. If you haven't yet seen the chart, there is a link for it that should be readily available so that you can view that along with today's report. That should give us enough to look at over the weekend. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.